Hello again, everyone. It's Vince Four from TradingWinds.com, and this is our update for September 5th, 2018. Let's take a quick look at today's markets. Well, we did see a very mixed close. It's not often that we say that, but today it's unfortunately the case. The Dow was higher by 22 points. That was the good news. The bad news was that the S&P 500 gave up a little over 8 points, but more importantly, the Nasdaq fell by a whopping 96 points. The leader there was Netflix, which we will get to in just a moment. But that really came after the announcement that Attorney General Jeff Sessions is scheduled to meet with state attorneys general later this month to quote-unquote discuss worries surrounding tech companies. This is, I guess, a follow-through from the warning that Trump gave last week about tech companies and how they better be very careful. Well, it looks like there might be some follow-through there, and the market did not like it. We'll go through some of those in just a moment. The Russell was lower today by almost 6 points as well, though it was much lower earlier in the session and did bounce late in the day. Bonds continued to fall. The yield on the 10-year note is up to 2.905. Crude also took it on the chin today, down $1.25 or 1.79%. This after Tropical Storm Gordon failed to become a hurricane. Now, I guess that's good news. That's good news for people living in the area. But certainly that sent the oil futures for a ride. Gold was higher by about $2.80, and that was due to some weakness in the U.S. dollar. Just a minor pullback after a couple of very, very strong days for the dollar. Now let's go back to that chart of Netflix. Netflix, along with many tech names, dragging the Nasdaq lower. Netflix here, doing the worst, down over 22 points or a little over 6%. And there are, bearish signs throughout here on the daily, the weekly, and the monthly charts. So let's go through this fairly quickly here. You can see that we had, ever since, trending really strongly higher for most of the year, had turned around and started putting in lower highs and lower lows. We tried to recover here, briefly put in a higher high, but now, with today's sell-off, that is a major reversal there. And once again, we closed below that 20-period moving average. Now, believe it or not, just below here, about 6 points below where we are right now, there is a major support level that needs to hold. Now, judging by today's candle, that seems unlikely. But regardless, right around 335 here, there's an area of support. And if we don't hold that, then this low here around 310 becomes the next target. And then that, breaking that, look out, we could be going much lower. If you look at the weekly chart here, we still have some momentum higher, but you can see that price moved from above to below that moving average, came back to retest it, and now is failing once again, making that 335 level all that much more important. And the monthly chart, although it looks fantastic, you can see that over the last 3-4 months here, we have been having lower lows and lower highs. And the scary part about this chart is that there really is no support level holding this up until we get all the way down to 135. Now, I don't think it's going to go from where we are here at 340 down to 135 immediately. But what I'm saying is, we got to take a closer look at those lower time frame charts for support levels. And right now, 335 is the level that needs to hold. That is the important one. Okay, we'll continue to follow this and all the other tech stocks, but that's about it for now. Enjoy the rest of your day, and we will see you on our next update.